Hey guys, welcome back to our channel. Today we're going to talk about something that nobody really likes, but it's kind of necessary, and that is taxes. So I'm going to do my best to make this really simple and straightforward. But today we're talking about 10 tax strategies that every middle-class family should know. Alright, so let's get started. Number 1, max out your retirement accounts. This is a big one. If your company offers a 401k match, take it. That is literally free money. So if your company matches up to a certain amount of your retirement contribution, take that full amount because it's literally free money. There's no reason not to. And if you can, consider a traditional IRA or a Roth IRA. A traditional IRA allows you to make tax-deductible contributions and lower your taxable income now, while a Roth IRA allows your investments to grow tax-free and you can withdraw money tax-free later in life. All right. Number 2, tax credits. Oh my gosh, people overlook this all the time. Unlike tax deductions, which reduce your taxable income, tax credits directly reduce your tax bill dollar for dollar. For example, the child tax credit can be worth up to $3,600 per child, and the earned income tax credit can be worth up to $6,128, depending on your income and how many kids you have. And if you or your spouse are going back to school, there are credits for that too. So be sure to look into that as well. Number 3, standard deduction versus itemized. So instead of itemizing your deductions, most people can actually take the standard deduction, which is a set amount that varies based on your filing status. For example, in 2023, single filers can take a standard deduction of $13,150. Married couples filing jointly can take a standard deduction of $27,700. And if your eligible expenses like mortgage interest, state and local taxes, charitable donations, or medical expenses exceed those standard deduction amounts, then itemizing might be a good idea. Number 4, health accounts. These accounts can really help you save on taxes. If you're eligible, an HSA or a health savings account allows you to contribute pre-tax dollars to an account that you can then use to pay for medical expenses tax-free. So you get the tax deduction going in, you don't get taxed on the way out. And any growth on the investment is also tax-free. You can invest in an HSA. It's a really great thing. You can roll it over from one year to the next. So if you don't use the money in your HSA one year, you don't lose it. An FSA or a flexible spending account can also help you save on taxes. With an FSA, you can use pre-tax dollars to pay for things like childcare or medical expenses. So these can really add up to some serious savings. Number 5, side hustles. So if you have a side hustle, you may be able to deduct certain expenses like mileage, supplies, home office, or software. Talk to a tax professional to find out what you can deduct. And if you're investing, hold on to those investments for the long term. Typically, long-term capital gains are taxed at lower rates than short-term. And I know this stuff can be a little overwhelming, but if you have a tax professional, be sure to ask questions and make sure that you understand everything. And if you don't have a tax professional, you can always go to free sites like Vita or IRS Free File to get help with your taxes. Those are great resources. So hopefully this helps. Remember, it's not just about reducing your tax bill this year, but building a solid plan that works for you and your family's future. Check with a licensed tax professional to make sure you're taking advantage of all the benefits that are out there. And hey, don't forget, April is right around the corner. So circle that on your calendar. All right, thanks for tuning in. If you found this video helpful, give us a like, subscribe to our channel for more smart money tips, and share this with someone who could benefit. We'd love to have you part of our community. So remember, taxes don't have to be complicated. There are lots of ways to save money and invest wisely. And with a little planning, you can keep more of what you earn. All right, until next time, take care.